All right, hello everybody. This is Anthony from Traders Ultimate Edge. It is February 10th. Let's look at the market today. We've of course had, I'm on totally the wrong day here. We of course had this big drop in the morning, an hour prior to open, and that was due to the CPI report. CPI report came in slightly hot. You've probably seen it by now. It came in about 0.1% hot on both MLM and YLY. We're now at 7.5% year-over-year inflation. Go us. If that higher that number goes, we would be winning, but that's not how it works. So anyway, that dropped down here this morning. We were trading that this morning. For those of my clients that got in here, we were trading this down. We did get some scalps in it. It was pretty nice. And then we had this rebound here. This rebound up to what I think is probably more or less fair market value. And I'm going to go over why I think that just a second. Let's go through this day. And then I'm going to pull another screen over here. You can take a look at it. All right, so we kind of cut sideways until this candle right here. This candle came out 12:45 market time. This was Fed Chairman Bullard saying we need to be at 1% by July. This is not news. It was news to everybody that doesn't know how to read Fed funds rate futures, but for everybody else, it's not news. And you know what happened right here? Check this out. I don't like this. Oh, I don't know if you like it or not, but it's cool. I'm going to drop down to the 5-second view right here. Find this. What time did this happen? Here. Okay. Right here. So we're down on the 5-second view. Okay. Look how many contracts are traded in 5 seconds. 2,500. 5,100. 2,400. 2,300. 2,600. You know what trades contracts, thousands and thousands of contracts in 25 seconds? Algos. That's what trades them. This dump was caused all by algos. This was 100% computer trading right here when Bullard made his statements. And what happened after that was followed by retail terrified, absolutely terrified, continuing to sell off the market. And that's what happened here, pushed it down. Now this market will not come back up until we see big money cover those short positions. Right now, we've got big money sitting on potentially tens of thousands short contracts. And this is not going to come back up until they cover those positions. And so we're looking to find evidence of covering. At the end of the day, this right here, let's zoom in on this and take a look. This big candle here. Like there was a lot of volume though. Oh, there definitely was. 2,500, 2,000, 1,500. Okay. This was probably some short covering here at the end of the day. And a significant amount as well. So there could have been big money dumping their positions here at the end. If I was big money, I would have dumped most of it and then held on a little piece to see what's going to happen overnight and stop out on it. It's probably what I would have done. So they may be doing the same thing. This could leave the door open for a push-up overnight, but it's kind of going to depend on what we might get out of Japan and London. I'll show you the Nikkei real quick. Nikkei. Anyway, they had pretty much the same look that we did today. Okay, so here was CPI right here. Fell, and it has pretty much the same look. So we sold the markets down for them. It's down a little over 1%, but it hit a trend line. See this trend line? Go out to the hourly view, you're going to see this is actually a fairly powerful trend line. I didn't drop perfectly on here, but you can see it comes from a little ways back, from back early February. And if we go way back, we might find more places that it hits. But nonetheless, it is on a trend line right now. So with a pullback in the Nikkei over here coming to its trend line, there's a possibility that they will start to buy up overnight and push us up. The same thing with London. There is a possibility that it will get pushed up overnight due to that overseas trading action. Now, the last thing I wanted to show you, and you're going to find this interesting. This is why What Bullard said is not news. And we've got this right here. This is the CME Group FedWatch tool. All right. If you don't know what this is, you can't find it, just Google search CME Group countdown to FOMC and you'll find this. This has all the target rate probabilities for all the Fed meetings. They're based on futures contracts. You can see the contracts right here. If you actually want to go look it up, the tickers are on each one. So let's look at this. The big thing that brought down the market was Bullard saying that there was going to be 1%, or he thinks there should be 1% in July. Bullard is one of the most hawkish member on the committee. Personally, I agree with him. We'll look at July. This was already priced in, guys. There's only a 0.8% chance there will be at less than 1% in July. This is already priced in. Nothing of what Bullard said was news, yet it drove down the market. The reason it drove it down, we already saw on the chart, was algos. That was big money using their weight to push the market around to make a profit. That's all it was. Okay, now we'll look forward. Look out here to the end of December. I want you to see this. This is the end of the year. So look at this. Target rate. Okay, the target rate right here, 1.75 to 2%. 34%. So we have 34, 28. This is over 50% right here. Over 50% probability. This is actually 55% or so probability that we're going to have a higher, will be at or higher, 1.75% interest rates. So that means we have at least 5 raises this year, at least, and possibly intra-meeting raises. And most likely, we will have 0.5 raises instead of 0.25. There is going to be a lot of raises this year. Personally, I think this is what needs to happen. I think we need to be at 2 or 2.25 at the end of the year. We absolutely have to be. Look at the inflation. The inflation is terrible, and the Fed needs to step up and do their jobs, which it now kind of seems like they're doing. And they need to get really aggressive really fast. But what I'm trying to point out here is that a lot of this is already priced into the market. So don't let something like this right here panic you out of your position. Where is it? Right here. Because it's all just algos trading. And this is something for day traders to look at when you see something like this. Always zoom in. Zoom in to like the 5-second level and look at it. If you have that anyway. It's like TradingView Premium. Anyway, you always want to get in there and look at it and see what's happening. And you get this kind of a move, it's going to largely be algos. And that's just kind of what happened here towards the end of the day. And like I say, there's definitely some evidence of short covering here. Definitely evidence of big money short covering. So we're going to have to see what happens overnight. I think the Nikkei is, it's at a nice level to get bought there. And based on the movements we saw up the past couple of days, I do think, let's see here, low from February 8th was right here. I've got it marked right here. I do think, so we see this started to take off. I do think we can go back up, and overnight's going to be interesting. I wouldn't expect a Globex low lower than 44.56. I would be relatively shocked if it went lower than 44.56. That's the low on February 8th. Certainly no lower than probably this trend line or the 200-day. But I do think it'll end this low February 8th as a Globex low. And then we should start to push back up. Now remember, the push up won't happen until big money wants us to push up. Everything happens at their whims, especially right now, because they know. Remember what big money knows. They already know we're going to get butt tons of interest rate rises. They already know it's going to happen. They also know that the trading public, that retail, that you and me, day traders, well, not if we're pros, right? Not if we do this every day. But I'm talking retail that doesn't really understand what they're doing. They are terrified. They are completely and utterly terrified because it's an unknown to them. They're terrified because they've never been in this situation. Inflation hasn't been this high, literally, since before I was born. But what we have to do is look at the situation, and we have to look at the fundamentals. This is why fundamentals, and I really stress this with all my clients, fundamentals are so ridiculously important. We have to understand the fundamentals of the situation and how big money manipulates the markets to their advantage, and how they make money doing it, and how they're preying on the fear of retail traders. And that's what this big dump was. They dumped the markets when Bullard said that because they knew it would freak out retail traders and they would get follow through. And they did. Now, I tried to trade this long at one point. I did try to get long after I found divergence and whatnot, kind of looking for a bottom. Didn't work out, stopped out, no big deal. It was a real small trade. It was over here somewhere. Real small trade, that's okay. We'll look again tomorrow, and let's see what happens overnight. If we get bought up overnight, then I would expect us to go back to these levels here. We have this 45.85 was our previous high. Would kind of be looking for it to meander back up there if we can get bought up overnight. If we don't, and we just stay flat, or if we go down, the Asian markets and London sell us down, then it could be a different story. It could really go either way, and a lot of it's in their hands right at the moment. We'll see what big money does in the morning on the back of that. So that's kind of how I'm looking at the market. That's where I think it's going. You all have a great day. I'll talk to you tomorrow, and take care.